Today we're going to be looking at SCHD, and that is the Schwab U.S. Dividend Equity ETF. And they just had their reconstitution, and that is basically a yearly spring cleanup that this ETF does in order to make sure that they continue to stay in line with their overall goals. So, as I said, SCHD is an ETF, an exchange traded fund that tracks the Dow Jones U.S. Dividend 100 Index. It incorporates those high quality dividend paying companies. And today is the day when they go about announcing the updates in its list of stocks to ensure that it includes only the best performers based on their strict criteria. So we're going to get into all the details of that in today's video. Their current dividend yield is about 3.49%, and they have a low expense ratio of 0.06%. When you invest into an ETF, there is going to be an expense ratio associated with it, but we like to keep those fees low, those management fees that are going to be charged on this type of fund in order to keep those returns as much as possible in our own pockets. So now let's go over the importance of the reconstitution process. For SCHD, this involves assessing companies based on their long-term track record of paying dividends, the balance sheet health of the particular company, and paying an above average dividend yield. By selecting the top 100 stocks that excel in these areas, SCHD aims to include only the best of the best when it comes to dividend paying companies. Now let's get into those additions. There are 20 new additions to the funds, and ticker symbol COP becoming its top holding. I'm not going to go through them all, but this is a listing of all of the new additions of the fund that you can take a look at. Some other notable additions are ticker symbol MRK, Merck, which is a healthcare company, and ticker symbol SLB, Schlumberger, another energy sector addition, which will have a weighting of about 2%. Other additions span different sectors, including consumer staples and financials, enhancing the fund's diversification. Some other very familiar names to me in the additions are Target and General Mills. Now on to some key removals from this fund. To maintain the 100 stock portfolio, removed 17 stocks during this last reconstitution. Significant deletions include Pfizer, which held 4.3% of the fund and is a healthcare company. It was possibly removed due to its increasing debt following a recent acquisition. Financial company BlackRock was removed, likely due to a dividend yield that no longer met SCHD's criteria. And another financial company removed was U.S. Bancorp. And here's a full list of the 17 deletions that have just occurred. A few familiar names to me are M&T Bank, Dick's Sporting Goods, as well as H&R Block. Several financial institutions, as well as consumer discretionary companies, were also removed, reflecting a strategy in the fund's composition. Now, let's take a look at that sector shift that these new additions and removals from the fund is creating. These recent changes have led to a notable increase in SCHD's exposure to the energy sector, which is now exceeding 20%. While energy companies can offer attractive yields, they may introduce volatility due to fluctuating oil and gas prices. So investors should consider how this increased energy exposure aligns with their individual risk tolerance and their overall investment goals. Now, I do have SCHD in my portfolio, and I will continue to build into it. I love the diversification that it brings to my portfolio, not being tech heavy like my investments into VOO and VTI, for example. By investing into SCHD, you will be gaining steady dividend growth because they incorporate those biggest dividend paying companies. This diversification makes it one of the top ETFs today. With everything going on right now with the tariffs and a lot of volatility on the market, this type of diversified ETF can help to bring stability as well as that steady income. Now, we're about to take a look at performance and current share price, which is $28.05 as of the time of this recording. So, definitely more affordable than investing into many of these individual stocks. And it being an ETF holding all of these different companies, it has less volatility than investing directly into these companies. But I never let that hold me back when it comes to investing because I invest regularly by buying fractional shares of those higher cost investments that I want to have additional exposure to in my portfolio. Most of my portfolios give me accessibility to invest as little as $5 at a time. A few months back, when SCHD announced their stock split, I found out by a comment from one of my viewers, and I was actually a little surprised that an $80 stock was having a 3-for-1 stock split. But it was true, and they made this even more affordable for us to get started investing and build up our share size. Now, let's take a look at the performance of this ETF. As I said, on the day, the share price is currently $28.05, up about 1%. Year to date, up 2.75%. Over the last year, up 6%. And over the last 5 years, up 113%. So these figures highlight SCHD's ability to provide consistent returns, making it a go-to for dividend-focused investors. And another plus when it comes to this fund is the sector diversification. This reconstitution has brought additional energy exposure. Consider how this increased energy sector weighting aligns with your risk tolerance. The fund continues to stay focused on maintaining its commitment to high-quality dividend-paying investments. The reconstitution reflects focus on optimizing based on the current market. And this fund that's been around since 2011 has provided consistent returns and demonstrated value for its dividend-focused investors. So as I said, I'm going to continue building into this particular investment. It brings diversification to my portfolio, and I believe that they will continue to let me have exposure to those high-quality dividend-paying companies, increasing their weighting in the energy sector and removing some of those financial and consumer discretionary indicate that they are striving to continue with the steady performance that they've had in the past years. I am striving to have a well-positioned portfolio that can weather the storm that we are currently dealing with when it comes to this new administration and a very volatile stock market. So just a quick update. I hope you enjoyed this video. If you're not already, subscribe, like, hit that notification bell so you can keep up with all of my videos and live streams. Let me know in the comments, were you surprised by any of the additions or deletions from this fund? I know Target was one that surprised me. But this fund is focused on those dividend payments. And yes, it has paid consistently, but it's not giving me the share appreciation when it comes to my investment into that company. Share your thoughts in the comments. How is SCHD currently performing in your portfolio? Will you be adding, or are you just holding on to what you currently have? Thanks for watching. Okay, bye.